Was Zhao's tweet an act of revenge to destroy his once billionaire friend Bankman-Fried? SBF used FTX funds for buying a luxurious house in Bahamas. Bankman-Fried gave away nearly $37 million to several Democratic candidates. Hey guys, this is Prashant from TechLudo, and we are now going to be talking about $32 billion empire vanishing overnight, and no prizes for guessing it. We are talking about crypto industry and FTX, the latest scam that has really taken the entire crypto industry by storm. Well, the crypto industry was going through harrowing times in the recent months already. And therefore, the last thing it could have wished for is the sudden collapse of one of the world's leading crypto exchanges, and that's FTX. But sadly, this is exactly what seems to have happened. The near bankruptcy of FTX, the second largest crypto exchange after Binance, has left the entire crypto industry stunned. Many are calling FTX a near bankruptcy as the Lehman Brothers moment for the cryptocurrency industry. Remember guys, it was financial giant Lehman Brothers' shocking collapse in 2008 and 9 that led to the decade-long global economic recession. And now, the crypto experts are fretting out whether the same painful fate awaits for the crypto industry following the FTX fiasco. But the question is, what really happened to FTX? Now, how did a company that was once valued at a staggering $32 billion came crashing down? Remember, this was the company that only a few months ago was the darling of the cryptocurrency industry. A company that was backed by the who's who of the VC world, including big giants like SoftBank and Sequoia. Well, in this latest video, we will be looking at some of the possible factors that eventually led to the collapse of FTX. At the very heart of FTX fiasco is one man, and that man is Sam Bankman-Fried, popularly known as FBF, who is actually the co-founder and CEO of FTX and just 30 years of age. Nearly a year ago, Bankman-Fried's net worth peaked out to almost $26 billion. Back then, many people saw him as the next big billionaire who would actually take the world by storm, just like Elon Musk is doing right now.
Okay, the guy you see next to me is the most generous billionaire in the world, and I found him.
Hi, my name is Sam.
But today, his net worth has dropped to only a few $1 million. Now, 2017 was the year when Bankman-Fried founded this company. No, it was not really FTX, but another company by the name Alameda Research. But interestingly, Alameda Research has supposedly played a big role in pushing FTX to near bankruptcy. But I'll be taking more on that a bit later. Right now, let us briefly talk about Alameda Research. Well, Alameda Research was founded as a cryptocurrency trading firm that provided finance and investment to companies dealing in the cryptocurrency market. And Alameda made pretty heavy investments since the very inception of it. According to popular website Crunchbase, Alameda made investments in nearly 185 cryptocurrency companies since 2017, making it one of the most sought after crypto investment companies in the world. But SBF was an ambitious person, like too ambitious actually. As it turned out, he was not going to stop at Alameda Research, and as a result, this man founded another company in 2019, and this company was obviously FTX. FTX also dealt in cryptos, but unlike Alameda Research, it was launched as a full-fledged crypto exchange. A crypto exchange is a place where people buy and sell cryptos like Bitcoin, Ethereum, and scores of other crypto altcoins. And in other words, it's like any other stock market where people usually buy and sell stocks of various companies in an aim to earn profit. And then, obviously, platforms like FTX charge a simple transaction fee, which is fundamentally their main revenue source. Now, FTX, by the way, did not really have to struggle really hard in attracting crypto investors to its platform. Within months of its launch, the platform attracted thousands of investors from the US and other parts of the world. And what also really helped in giving FTX a good head start was SBF's solid connection in the crypto industry and his growing fan base among the crypto fans. And this was obviously largely thanks to the runaway success of SBF's previous company, Alameda Research. FTX's good start also got another huge boost when barely 6 months after its launch, what's the largest crypto exchange, Binance founder and CEO, bought nearly 20% stake in FTX. Now, even though Binance was FTX's direct competitor, but Binance association further helped in cementing FTX's reputation in the crypto industry. And this actually helped in bringing more funds for the new company. In July 2021, SBF's company raised $900 million from nearly 60 investors, including the likes of SoftBank and Sequoia, at an eye-popping valuation of $18 billion. This was followed with another fundraising exercise in January 2022, that is exactly this year, with the company raising almost $400 million at a staggering valuation of $32 billion.
Few $1 billion over the course of the last couple of years, and we're a profitable business.
With VC funds pouring so easily and its valuation climbing steadily, FTX really appeared to be on a very strong footing. And the company supposedly had some really strong numbers by its side to back its claim. FTX had more than 1 million users on mobile as well as desktop platforms, and even managed to clock $385 billion annual crypto trading volume. And it managed to achieve all this by the end of 2020, which is barely 1 year after the company was launched. Now, it also reported a revenue earning of nearly $1.02 billion in 2021 itself. So to make long story short, FTX and its founder SBF were absolutely on moon. In fact, in its heydays, SBF once famously said to the media that one day FTX balance sheet would be so strong that it could even buy American investment giant firm Goldman Sachs. Well, sadly, looking at how things are proceeding right now, in hindsight, Bankman-Fried not only appears as overconfident and arrogant, but also plain stupid. Talking more about FTX good times, the company poured insane amount of money in marketing and branding. It mainly focused on sports sponsorship deals for enhancing its brand appeal. For instance, in May last year, the company signed a $135 million sponsorship deal with NBA basketball team Miami Heat. It also struck a multi-billion-dollar deal with Formula One team Mercedes F1, and also spent millions on television as well as print advertising. In other words, FTX was now everywhere, and so was Bankman-Fried. This 30-year-old man was even hobnobbing with some of the biggest politicians of America. In fact, many will be surprised to know that SBF made heavy political donations to the Democratic Party during the 2020 US presidential elections. According to a rough estimate, Bankman-Fried gave away nearly $37 million to several Democratic candidates during the 2020 presidential election, making him one of the highest political donors. So, from hobnobbing with top politicians to signing multi-billion-dollar deals with leading sports teams, it literally seemed FTX and SBF was absolutely unstoppable. And many even predicted that SBF will revolutionize the crypto industry in the same way as Mark Zuckerberg revolutionized the social media world, or Elon Musk, our own Elon, did with the EV car industry. So, the fundamental question is, when and how did everything went wrong for FTX? What really led to the spectacular collapse of FTX? Well, the answer is FTT and FTX murky dealings with Alameda Research. First, let's talk about FTT, something that I haven't really spoken about till now. Well, FTT is a crypto token that FTX had launched with huge fanfare barely months after the company was launched in 2019. The aim of launching FTT was obviously to help FTX in making extra revenue beyond the revenue that it used to earn through transaction fee. The idea was to make FTT one of the most sought after crypto tokens and drive up its valuation, which would have actually helped FTX in mining huge profit in future. And it is actually a pretty standard practice for leading crypto exchanges to launch their own tokens. Even Binance has its own coin called Binance Coin. Now, to make FTT popular among the crypto investors, FTX had promised all FTT token holders preferential access to their trading platform and other features like lower fees, no cost withdrawal, etc. etc. Now, this did help FTT in getting some standing in the market, and its price inched up in the crypto market like anything. Now, let us briefly shift our attention to Alameda Research, which will actually clear the entire story to my viewers.
So Alameda Research is the first company I started up, and it was a crypto quant trading firm. And, the sort of founding of it was basically, well, Bitcoin was trading on a lot of different crypto exchanges, and it was not trading at the same price at all.
Now, for almost 3 years, SBF has been trying very hard, like really hard, to convince everyone that Alameda Research and FTX are not at all related to each other. He assured that even though both companies dealt in crypto industry, these two companies maintained arm's distance with each other. But as it turned out, these assuring statements by SBF proved to be a big lie. According to a recent speculation and barrage of media reports, during last 2 years, FTX had transferred a huge amount of money to Alameda Research. Now, most of this money constituted of fiat currencies that customers had deposited in their FTX wallet. And since FTX customers were kept blindly about this money being misused, this act was nothing short of a corporate fraud, a brutal fraud. It is alleged that Alameda Research used these billions of dollars for investing in many loss-making business ventures and risky business decisions that backfired big time. In other words, Alameda duped the hard-earned money of FTX customers in a blatant act of corporate fraud. But Alameda's alleged role in pulling off this massive scam does not really end here. That's because FTX had also transferred huge amount of FTT tokens to Alameda Research account. This is according to Alameda Research balance sheet that got leaked on cryptocurrency news portal Coinbase. According to this balance sheet, Alameda used FTT tokens as a collateral for taking business loans.
It's okay to do a deal that is moderately bad in bailing out a place.
And as per the leaked balance sheet on Coinbase, nearly a third of Alameda's assets worth $14.6 billion were held in FTT tokens. But there is one interesting question that begs for an answer. How can Alameda use FTT as a collateral when FTT tokens did not hold much market value in the first place? Yes, in its heydays, FTT was considered an upcoming crypto token, but the token never really took off in real sense and hence never really attained a mass popularity. Therefore, conventionally, no bank or financial institution would ever accept FTT as a collateral for giving huge loans to Alameda. Clearly, Alameda and its founder SBF has some serious explanation to do. Bankman-Fried, by the way, also needs to seriously explain whether he used FTX funds for his personal expenses. According to the latest allegations, SBF used FTX funds for buying a luxurious house in Bahamas and lots of expensive gifts for his close friends and pals. Well, all these allegations seem to clearly point out that accounting practices in FTX were downright poor and fraudulent. Poor accounting practices also meant that FTX may have also exaggerated its profit and revenue numbers in all its previous financial statements. What is equally shocking is the fact that FTX high-profile investors like SoftBank and Sequoia care little about verifying FTX accounts. It seems that these investors either deliberately turned blind or were completely unaware that FTX was fudging its accounts. As for FTX customers and creditors are concerned, they certainly seem to have lost all their money. Since past few weeks, millions of customers who logged into their FTX accounts to withdraw their money were shocked to know that all their money is gone forever. Now that FTX has filed for bankruptcy, all their hopes of recovering the money have all vanished. At the time of filing bankruptcy, FTX had more than 1 million creditors on its account. And today, many of these creditors are facing grave financial uncertainties, while many have reportedly gone bankrupt. There is another very interesting element to the FTX scandal, and this has to do with the Binance founder and CEO Changpeng Zhao, who in a way played a role of a catalyst in the downfall of FTX. Well, remember, in the beginning of the story I had told you that Binance had bought 20% stake in FTX, but barely a year after that deal, FTX founder Bankman-Fried had bought back that 20% stake from Binance. This reportedly happened because SBF and Changpeng Zhao had an ugly fallout and were no longer good friends. But the more important thing to know is that when FTX bought this 20% stake back from Changpeng Zhao, it wasn't an all-cash deal. FTX made a partial payment in FTT tokens to Zhao, making Zhao one of the largest investors in FTT tokens. And here comes the real part of the story. Zhao held on to these FTT tokens until Alameda Research balance sheet got leaked on the Coinbase website barely a few weeks back. Once the leaked balance sheet revealed the disturbing story of Alameda and FTX and the worthless value of FTT tokens, well, Zhao immediately took to Twitter and said that he is selling all his FTT tokens in a bid to recover his own investment. This particular tweet by Zhao set frenzy and panic among FTX customers who now rushed to their FTX accounts to withdraw their own money. And now the tricky question is, was Zhao's tweet an act of revenge to destroy his once billionaire friend Bankman-Fried? Well, the ego slugfest between the two young billionaires who became sworn enemies only makes FTX scandal so much more interesting. FTX scandal is certainly going to hit the cryptocurrency industry really hard. Many believe that this scandal may give a fresh weapon to governments across the world to launch a fresh regulatory crackdown against the crypto industry. Top countries across the world, including India and China, have repeatedly expressed their open disgust for cryptos, claiming that crypto investment is nothing but a Ponzi scheme. Many crypto analysts claim that FTX scandal may help in filtering out the bad and poorly run crypto exchanges while keeping the good ones intact. But only time will tell whether the crypto industry will rise from the current crisis and restore the confidence of retail and institutional investors. But one thing is for sure, the crypto industry, which is now already reeling under unprecedented crisis, cannot really afford another big scandal like this. Not at least in the near future. Well, that was it with the story. If you liked it, smash the like button, subscribe to our channel. This is Prashant signing off. See you in the next one.